Welcome to TradeTheMBI.com. This is John's reports for the 19th of February. And well, from the holiday and that, not a whole lot happened, and we could see still a whole lot, much of anything is taking place at this point. We're sort of stuck in this previous cap going all the way back to December. And even though we've had positive from the MBI reading here with Magenta still leading, you can see now that we finally have a pretty sharp increase in the number of shorts. And this is just a reflection of as I was talking about, the uncertainty of how quickly things will change from a domestic. I mean, you see a lot of stuff happening internationally and everything else, and is peace necessarily the best thing for the market? Maybe not so much. There's a lot of turmoil that's developing between at least the EU, and that you can see from a shakeout standpoint, still continuing a negative drift here. We haven't even been towards the positive side of things for quite some time now, and market's still holding up. Where else are you going to put your money? It's not like you can really do anything in treasuries at this particular point, even though the Fed is sort of antithetical to the way things are, because they're just not sure how the tariff thing plays out. But most of what you're looking at from that standpoint is reciprocal, just charging the same thing that they're charging. Is that going to cost more? Well, potentially it could, but it also adds incentive to localized production. Now you can see from a DOC reading here, you got steel dipping, so it's just short-term buyers just not really doing anything, and we're caught with that orange caught between cyan and red, which is a continuation mode. It's pretty straightforward from that standpoint. From an NQ standpoint, likewise the same. So you can see, relatively speaking, markets are in pretty identical space. You can see a little variation with Magenta was much stronger from the NQ. That's starting to fade off a little bit. You can see if we get a dip of steel below cyan, then I think you would expect to see a little bit more from a decay standpoint in pricing. Still relatively decent here. You go from treasuries, just nothing happening. It's just caught in a malaise. And so what are you going to do? You want any kind of real return, given that the inflation is not under control, you're still going to have to move to market-related assets. And this, unfortunately, is the reason for it. As long as oil remains at these elevated levels, you're not anywhere close. So, of course, it's only been a month of Trump, but we really haven't seen a whole lot of movement from the oil situation. I think some of that is just the stagnation from leftover regulations and trying to work through that from the Biden era. And until that's worked through, and like I said, it wasn't going to happen until the later part of the year before you'll see any result on that. You're just stuck there. Now, the Euro's had a great run, but now Europe is realizing, oh shoot, we're going to have to put a lot more money towards defense and that they weren't expecting, and that's going to be highly negative for them, because they're already in a situation where now they're having to talk about changing EU rules on budgets and that, because they can't meet those needs, and still having spent as little as they have been. You throw in the tariff side of it, and whew, not going to be pretty for them. But it's just a reflection of U.S. dominance. But see gold continuing its push, and it's not going to stop. Breaking that psychological 3,000 barrier will be a significant one, but it's coming. Just a question of how soon. Never been a doubt on that standpoint. And you can see, interestingly enough, from the crypto standpoint, all that excitement that had fed everything, gold's catching up to it. And once gold gets there from a parity standpoint, as far as the relative increase that we had earlier for crypto, then you'll probably start to see some crypto build from that standpoint. But until then, I think it's just sort of in a malaise at this particular stage. Looking at it from a 50K standpoint, we had the holiday. That was all just fun and games there, and then of course they filled it all back in. We had this positive extreme from right back here. Didn't quite get met. The secondary one absolutely did get met on that retrace from before. So with this MBI white spike that we're seeing right now, you could see some move back towards the 50%. The question will be, will that rise up to meet the previous positive extremes almost at there right now? So overall, the market still outperforming relative to what those readings are. Let me look at it from, let's go all the way to the post-market here right now, and you can see pretty significant European sell-off at this particular stage relative to ES in this state. And that's, filling back a lot of this positive jump that took place at the end of the day. And of course, like we've talked about before, that's a lot of just canceling out, call buyers versus the puts. And once that equilibrium is reached, then, you just get the same move back and forth. But right now, it's still pretty solid ranges within what is ultimately daily, not a whole lot of difference. And that's until things start to clarify. And I think we're still a little ways away from that. But nonetheless, still relatively good action from a movement standpoint. So can't complain with that. As always, though, anything relevant, I'll put on the Skype chat for you. Have a good one. Trade well.